At the start of this editorial, I think I have to make a confession right up front. This is about the Banking Royal Commission, and I must admit I was one of these people who didn't think that we'd possibly get anything out of, or at least not significantly, out of the Royal Commission. But boy oh boy, ever since the spotlight has been turned on the financial services and more importantly the financial planning arm of some of the organisations and the financial planning industry in itself, there have been unbelievable revelations after revelations. Look, just to name a few, we saw AMP charging fees for no advice. We saw CBA charging a fee for the offer to review clients' portfolios. We saw CBA charging fees for customers who had already died. And then of course, most recently, we saw Henderson Maxwell being grilled about some poor advice surrounding SMSF rollovers and obviously also a failure to disclose an interest they had in some property funds which they were trying to steer their clients towards. Now, I've been covering financial services for about 14 years now, and after the revelations I've heard in the last week or so, I think the industry's been put back perhaps even 10 years. And it's not all about institutions. You know, a lot of people will argue about, oh, of course CBA is such a large organisation, as are the other banks, that this sort of stuff will happen. AMP, another massive organisation, how can you control it? But Henderson Maxwell is an independent licensee. That is a boutique financial planning office and practice. So if we're looking at stuff like this happening across the board, you know, where does it end? And also perhaps if we reflect on the reforms that have gone on so far, we can probably see that in a lot of ways they've been ineffectual. FOFA, was the future of financial advice, was very much about trying to get rid of trail commissions and those sorts of practices and move the industry straight to a fee-for-service situation of remuneration. That was supposed to be more transparent, more upfront, and a lot better for the client to know what they were getting. Now, as much of the criticism around commissions and trail commissions came about, at that time, under the legislation, charging commissions and trail commissions, that was still legal. Charging fees for no service, and we've moved to a fee-for-service environment, charging fees for no service, that's illegal. So, yeah, okay, this reform's come in, but what has it actually achieved? These organisations are finding ways, illegal ways, to get around that and try and maximise their remuneration from clients in a totally illegal and immoral way, I suppose you could say. I mean, obviously, the morality of the situation is completely wrong as well. That probably brings us to the situation of ethics. You know, the Financial Advisor Standards and Ethics Authority right now is trying to come up with minimum levels of education for financial planners entering the industry, and also existing financial planners having to bridge their knowledge gap, some of which, or a lot of which, revolves around ethics, around adhering to a code of ethics, having to do extra modules in ethics to try and correct this situation. Now, the problem being, I know that a lot of people have used this expression, but I think it's very true. With the AMP and the CBA examples, it would appear that the fish rots from the head down. Now, if we're going to talk about ethics, yes, the individual planner will have to go through some sort of ethics course and study the ethics modules to try and become more professional in their behaviour. But who's to say that will the CEO of AMP, who controls this process or is responsible for this process, does he have to do an ethics course? Does he have to adhere to a code of ethics? Does the board of AMP have to do an ethics course? Do they have to adhere to a code of ethics? If not, perhaps we're even looking in the wrong direction, because if these guys control the behaviour, and these fees were not necessarily charged by individual planners, this directive came from the top, where do we go from here? Is the ethics focus even going to be effective or as effective as people think it's going to be? Now, obviously, some punishment has to come down the line. There has to be some repercussions surrounding all of these revelations that have come out. I know the government's already made an announcement around a fining process where some of these organisations might be fined $200 million for these breaches of the law, and also not obviously disclosing some of this to the regulator either. However, we've already seen that there's a fine process in place with the anti-money laundering legislation, which, again, not meaning to pick on the Commonwealth Bank, but they were found to be in breach of the anti-money laundering laws. Now, that carried a massive fine. I'm not 100% sure what the final total was, but it was in the millions of dollars, at least. That was waived because it was like, well, it's too much money, we're not going to adhere to that. So if we're going to have fines and not actually impose the fines when they arise and the punishment befits those fines, where do we go from here? Surely jail time has to be meted out to some of the people who are perpetrating these sorts of things. To me, it's the only way that we can rebuild the confidence in the financial planning sector. Already pressure's being brought to bear on the AMP board. Interestingly enough, their annual general meeting is coming up soon. There's already been ructions around shareholders taking actions against the board and certainly not re-electing 3 board members, I think, who are coming up for re-election. But that's the only way that's going to save their investment in the company, because obviously the share price has gone down so much since the revelations happened. But jail time is definitely necessary so that some punishment or some fitting punishment can be seen to be associated with these, abhorrent pieces of behaviour and illegal, I might add, behaviour in the industry. Now, just to paint some context around what's been happening in financial services as opposed to other sectors. So this lady in Townsville, $270,000 embezzled from Surf Lifesaving. She got 6 years. I ask you, what's the befitting punishment? And I think we have to secure some jail time here for the people who have rorted millions of dollars from their client base, from these larger organisations. Now, naturally enough, there will be more revelations. The superannuation side of things is coming up from the Royal Commission, and we'll just see what other things are revealed. I mean, personally, I've found every day quite jaw-dropping, really, when I've been listening to the evidence. So we'll see what happens, but more importantly, let's see what repercussions come out of this.